Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our 3-day Metals and Mining Conference. Our next presentation is from DynaResource. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Rowan Hazelton, President and Chief Executive Officer of DynaResource, which trades on the OTCQX Best Market under the symbol DYNR. Welcome, Rowan.
Great. Thank you, Greg, and thank you to the OTC for hosting the conference, and thanks to everyone for joining today, your time and attention. I'd like to introduce you and tell you a bit more about DynaResource. We are a gold producer in Mexico, operating the 100% owned San Jose de Gracia mine. And before we go into detail on the slides, just give you a bit more introduction. We are in production today. We are profitable and we are growing. We expect to produce 30,000 ounces of gold in 2025 at just under $2,000 an ounce, all-in sustaining costs. We have been in production for almost 10 years, and we have significant exploration potential with the right characteristics to be a multi-million ounce deposit and reaching towards 50,000 ounces a year in production. I think this is an excellent opportunity and timing for new investors in DynaResource as we are growing from what is, has practically been a private company in terms of structure. I was brought into DynaResource last year in order to grow and optimize the operations and grow the company. We are looking to uplist onto a major North American exchange later this year. Just in terms of some information in the presentation, forward-looking statement that you can read on our website at your leisure. Just a bit more background on DynaResource. The San Jose de Gracia mine is located in western Mexico. It was a bonanza grade type mine in the late 1800s, early 1900s. And mine what we believe is approximately 1 million ounces at 1 to 2 ounces or 30 to 60 grams per ton. And then there was minimal commercial exploitation throughout the 1900s and minimal exploration until DynaResource started to acquire the concessions in the late 1990s and pulled those concessions together over about a period of 3 or 4 years. And then began to explore and delineate the resource for approximately a decade, and then brought the mine into production just under 10 years ago in 2016. With that background in historical mining, there is still significant exploration potential and high-grade potential both in our existing mine and operations and in the district in general, which I'll go into some detail. Today, we have only a market cap of 30 million ounces with growing 30 million market cap with growing margins and significant upside to our share price, our production, and certainly to ounces in the ground. And myself and the team that have joined precisely for this upside. Just a few minutes on myself and the team. I've been in mining for almost 25 years. I was a founding member of what became Goldcorp and ultimately now part of Newmont, as well as Wheaton Precious Minerals. And I've really spent my whole career in building and growing, junior mining into larger companies. Brought in with me a significant team with significant experience in order to optimize and grow San Jose de Gracia. And I think with the blue sky exploration potential that we have, which is really one of the most exciting things of San Jose de Gracia and DynaResource. We're looking to really build on that and build a substantial company. In terms of the district, we're in really what is the right district and address in being in the Sierra Madres, the Western Sierra Madres in Mexico. Again, with a production history that had been growing from a small operation at about 100 tons per day when we first started producing in 2016 to approximately 800 tons per day now with still room for additional growth. Again, we're targeting 27 to 30,000 ounces of gold production this year. We have a historical resource estimate from 2012 indicating 1.1 million ounces of gold We've, of course, been mining for almost 10 years since then. We'll be putting out an updated resource estimate within the next several weeks, along with a first-time maiden reserve estimate, which will provide additional information for investors on our economics and mine life and so on. And that'll be coming out shortly. We are fully permitted and have our rights to our concessions for almost another 50 years. Why DynaResource right now? Again, we are producing today. We're producing at a profitable margin and looking to grow both production and ounces. And some, and I'll go through some of the additional exploration potential. Since joining in the middle of last year, we focused significantly on optimizing both the mine and the mill. On the mill side, putting in significant sort of new improvements in the mill in terms of efficiencies and capital investments, looking for cost reductions and also improvement in recoveries. We're looking to install a gravity circuit later this quarter that we expect will have a significant impact of at least 5% or 5 to 10% improvements in recoveries. And we've been putting significant investments into the underground as well in terms of underground development and infrastructure in order to improve our mining flexibility. And that's sort of all been in the last half of 2024 and the first quarter of this year. Our new team that I brought in, that they're excited to be growing this mine and company, include General Manager Luis Portugal, who I worked with previously at Goldcorp and has significant experience in this kind of mining, precisely in terms of narrow vein underground mining, and has already brought significant value to the project in terms of how to interpret the geology and expand and extend our veins and sort of mineable inventory. He spent over 10 years in the San Dimas mine in Teotita, Mexico, among others, which I'll go into. So in the near term, some of our catalysts in terms of milestones in 2025 and beyond. As mentioned, we will be publishing in the very, very near term, in the next several weeks, approximately at the same time as our release of our Q1 financials, our maiden mineral reserve estimate will be in the form of a pre-feasibility study under the US SK 1300 guidance and rules, which are very similar to the Canadian 43101 standards that many of you are likely familiar with. With that, initial reserve statement, in addition to having economic projections and information about our financial condition of the mine, it also, as a reserve, it'll also allow us to change our accounting policies that in order to properly capitalize capital items such as underground development and essentially all other capital that previously had been being expensed, given that we didn't have a compliant reserve statement. And this will allow us to be comparable to other companies in terms of comparing both cash costs and all-in sustaining costs. We have been expanding our drill program from underground in terms of looking at near-term and near mine extensions, and we will be expanding that to a surface drill program, restarting our surface drill program in the third quarter, and we're targeting a drill program all in from underground and surface of approximately 15,000 meters this year, and also the installation of our gravity circuit to focus on increasing recoveries later this quarter, with commissioning likely in early in the third quarter. We're also targeting an uplist to a major exchange in North America by the end of this year, possibly a bit sooner, in order to provide additional liquidity and attract an awareness and attract new investors and facilitate both growing capital and growing the company. In the medium term to a bit longer, we're targeting a production target of about 50,000 ounces per year, and that would be achieved primarily through three means. One, improving recoveries, which is mentioned are targeted at 5 to 10% improvement, looking for grade improvements of 10% plus, and then looking at potentially a mill expansion, assuming our exploration program proves out sufficient resources and flexibility to improve and expand the mill, say to a target of approximately 1,100 to 1,200 tons per day. Just a little more detail on our outlook and guidance for this year. Our all-in sustaining cost target of $1,850 to $2,050 per ounce. We're still working hard as a team to reduce those all-in sustaining costs, both in terms of increasing production, increasing recoveries, but also decreasing our absolute costs in terms of improved and more efficient mining. We're looking to add in long hole stoping for a portion of our mining, and continuously looking at ways to reduce costs with vendor management and other efficiencies. Our basic all-in sustaining capital expenditures target of $3.5 to $4 million, mainly in the mill and plant equipment, as well as additional underground development. In terms of exploration, as mentioned, we're targeting an exploration program of between $2.5 and $3 million this year, including both underground and from surface. There's a question which I'll just use as an opportunity to highlight and emphasize what was on the prior slide in terms of a question about the catalyst for re-rating, and I think there's several. I think the first and foremost is getting awareness out of the company, and which has been flying very much under the radar for many years in terms of our production and production and profits and that and cash flow. And then I think secondly, the technical report, which will be coming out, and thirdly, an uplist to an exchange and increasing our major exchange in the U.S. Most likely, or possibly in Canada to increase awareness among investors. Just moving on to the next page. Given our most recent financials reporting was on Q4 and our year end, this information just summarizes some of that. You can find that in our filings in our 10K. But just as a quick note, we've had substantial improvements in the second half of last year, both improvements quarter over quarter, which is shown in some of the graphs below in terms of 25+% improvements quarter over quarter and year over year in both in revenue and tons milled and sort of in the 30% plus improvement. So again, we've been focused as a team in terms of optimizing and especially improving our mining controls from underground and improving our consistency in milling and targeting an 800 plus ton per day operation. This slide here just summarizes some information from a recent press release that goes into more detail about the gravity circuit that we're installing. Maybe I'll take the opportunity to mention that we produced today a flotation concentrate that we truck and truck down to the Port of Manzanillo and sell to our off-taker. And with a gravity circuit, we'll be looking to produce a higher grade gravity concentration, which we'll also ship and sell separately. And the lab results showed plus 95% combined recoveries between flotation and gravity with the technology that we have, and in adding in the gravity circuit. Those are Falcon concentrators made by Sepro. We had installed one in July of last year. and it's been functioning well. And so we are installing a trio of 3 additional concentrators that will be installed right after the ball mills. So again, the combined lab results show 95% plus recovery. We've been achieving today, closer to 75 or 76% recovery, and we believe strongly that installing these Falcon concentrators will get a minimum of 80% recovery and possibly 85. In fact, in the past, when the mill and operation were much smaller, there was a gravity circuit, but it was much smaller, and so the company has achieved in the past results of in those mid to high 80s recoveries that we think we can get closer to that again in the future. And there's more detail in our recent press release. I'll just answer questions that we just came through, sort of costs and target. There's a question about targeted all-in sustaining costs and what is our path to improve profitability. I'd say our targeted all-in sustaining costs is sub 1,800. Our cash costs today are between 1,500 and 1,600 an ounce, and 1,500 and below would be our target on the cash cost side. And the path to achieving them is both in terms of increased recoveries and production, in terms of increasing the ounces and the unit produced per same unit cost, and also on the cost side in terms of stricter vendor management. We've been making some changes in some of our key contractors, and also greater supervision and changing of some of the mining methods in our underground contract miners. So I just skipped over. Just to recap on where we are, and we believe we're in the right zip code and address. We're sort of right in the middle of the Sierra Madre corridor, which contains significant both historic and many significant current producing gold and silver mines, and we're in the lower sort of portion of the Sierra Madres, much closer to the coast, and really only 3 or 4 hours drive up from the local cities with a light vehicle. So we have a lot of similar geological tendencies to a lot of the larger mines in the region, and that forms part of our belief in significant exploration potential. Here, these next few slides really just outline our current existing mineable inventory, which until we produce that tech report in the next few weeks, we're not can't refer to it as a resource. But what you can see here, this is really our existing block models, and the color coding in the legends in both pictures are in grams per ton, with red and being 3 to 5 grams a ton, and purple greater than 5 grams a ton. The historic resource indicated about 5.6 grams a ton in all categories. It was mostly in inferred, and our new tech report coming out will be sort of in that ballpark. Again, we have 3 main mining areas that we call Tres Amigos, San Pablo, and Mochomera, and that's a little bit more visible here on the next slide. This here with the Google Earth in the middle, a view of our overall mining district. Between the middle red circle, that's Tres Amigos, that's sort of to the north end of our current mining, and then Mochomera, which is just above the red circle at the bottom, is really the south end of our current mining. In the very bottom of the picture, that's where our plant and operations and camp and offices are, and the small town of San Jose de Gracia, which is approximately 800 people. On the right is just some of the geology in the region, if it's a little harder to see on this picture. On the next slide, we just see a summary of drilling since really modern mining drilling since the early 1990s. Again, there was very little activity prior to that, with some small commercial mining and some small artisanal mining. The early drilling was done by Peñoles, and then later a company, Golden Hemlock, until DynaResource started to acquire the concessions and ran an exploration program. So all in, just over 120,000 meters of drilling, and that's what we included in this upcoming resource. Here in this slide is a cross-section view of the property and our operating mines. Again, Tres Amigos just to the center of the left, and Mochimera down on the right. A number of things to point out here. First of all, our deepest operation is at Tres Amigos, which from surface is just about 300 meters, and we've been mining for the past 5 or 6 years. San Pablo, which is not quite at that depth, closer to 250 meters, and then Mochimera to the right, that we just opened up and started mining in the middle of last year. And so all of these deposits still have mine life and potential to grow, in particular, especially at San Pablo, Mochimera, and where we've continued to see strong results, again, with the team, both Luis himself and the team that he's brought in. Just a couple of even the pictures on the top right, that sort of rock sample of almost 80 grams a ton. That's an area of San Pablo to the south and at depth at the 500 level, in an area that has had some significant faulting, that previously the company had wasn't able to find the extensions, and with a new sort of interpretation of, well, primarily structural geology and geological interpretation overall, we mined through that fault zone and found these extension of high-grade zones, which we've been taking advantage of since October. Now, in some of the other targets that are numbered there, for example, 1, 2, 5, and 6 in the middle, those have drill information on them today. They have significant, but still have significant potential in terms of, some of those areas are very sparsely, widely drilled, and those areas will make up, what will be in part of our resource and reserve estimate that'll be forthcoming. But there's other areas, especially to the north, targets 8 and 9 here, and especially 9 that we call Hacienditas, that have have significant historical chip samples that we found from some historical adits and historical very small scale, really sort of 30 to 50 meter adits, that had information even of, say, 1 ounce per ton. And so this is where we want to get drilling later in this year, by or on Q4, and start getting information from this area to the north that we see significant possibility to expand the resource. Just on our capital structure, and I mentioned that at the beginning, that in many ways, DynaResource has been financed and structured almost like a private company in many ways. It's tightly held, 100% retail or individual owned, and essentially, approximately 15 people own about 70% of the company. 2 investors own approximately 50% on a fully diluted basis, and our insiders own 14%. So we've got just over 29.4 million shares outstanding basic, and 38 million fully diluted. So again, that's approximately, I think today now we're just a little bit over 30 million market cap. And on the dilutable side, that's primarily a couple series of preferred shares that were issued to less than a half a dozen of some key shareholders in order to entice them for some continued capital infusions sort of in the past 5 or 10 years. a lot of that is structures that we'll be looking to kind of simplify, on or before an uplisting. Our largest investor is a family office in Dallas, and again, a lot of the original financing and continued financing had been through essentially sort of friends and family, and that's why we're looking to expand the company's capital structure through uplisting and likely some additional capital raise as part of that. Just a very quick slide on relative valuation. Again, we're valued at, say, approximately $1,000 an ounce on production basis. We'll be able to show other metrics once we produce our tech report and can compare on ounces in the ground and other metrics. But bottom line is, we see significant potential for re-rating. And then finally, just on who is on the team, here's just a summary. I'll just point out a couple other people. Dave Keogh is our Chief Operating Officer. I worked with him also at Goldcorp, has significant experience in running and growing small to larger companies. And then there's a summary of our board, which has some significant mining experience on our board. So with that, I'll look to the questions here and just go through. I know I've answered a couple as I went along. One question here, whether we attracting institutional interest? We've certainly attracted a lot of interest in terms of additional sophisticated investors. We've had some conversations with institutions, and many of them have been eager to see our forthcoming technical report, which will really allow us to outreach to even additional institutional investors. But overall, I'd say whether it's retail, high net worth, brokers, and institutions, this story resonates extremely well. The vast majority, if not almost everyone, this is a new story to them, and I think that's exactly what makes this an exciting opportunity now for current management who are also new to the team, and to new investors to this story. Another question here is, how does the new resource compare to the previous, and what does it mean for the company? Again, given that we've been mining for almost 10 years, it will be a smaller resource than what was shown previously, but it'll be of a much higher quality, both in terms of the fact that we'll be publishing reserves, but also within those resource categories, it'll be primarily in the measured and indicated category versus inferred. So in these years of both mining and additional drilling, that information is being used to produce block model and information that really will show a higher quality of resource and reserve. Another question is, given the tightly held structure, how do we move forward and get liquidity up? Certainly, the marketing that we're doing now and trying to getting the story out in more distribution channels, which we'll be working even further on in order to get people to see and understand the story, and hopefully come to start trading in the stock and investing in the company. And then in our path towards an uplist, which we see again being before the end of the year, approximately maybe within a 6-month time frame, in terms of adding additional liquidity to the company and additional means of exchange. There's certainly a lot of folks that have difficulty at times trading in our stock, and so improving that's one of and getting our goals, and then both in terms of marketing the story, as part of that process, and getting in front of significant amount of institutional investors, we think will improve, improve liquidity, into the trading. We know that today is very thinly traded. Not only are we tightly held, as mentioned, but the vast majority of our shares are held in certificate form. So, we're looking to sort of move the whole equation into a much more liquid and traded stock for the benefit of all existing and new shareholders. I think that concludes the questions that I have, and so I'll turn it back to the OTC. Thank you very much, everyone, for your attention, and please reach out if you'd like more information or would like to hear from our team, and look forward to engaging with you again. Thank you.